$550 billion in February alone. Volume just doubled. The bankers are officially back from the Hamptons.
Or they just found cheaper debt. Look at the actual deals, Nate. Apollo dropping $3.7 billion on a Japanese glassmaker isn't exactly the AI supercycle Goldman keeps promising us.
It is an infrastructure play for renewables. You are way too obsessed with software multiples.
I'm obsessed with margins. But fine, let's look at Apollo's giant window shopping spree. The rundown.
$550 billion in a single month. February deal volume literally doubled from January. I am officially calling the M&A winter over.
You call the winter over every time a couple of mega deals close in the same week. But yes, the second highest monthly volume in 4 years is a real data point.
Even Goldman is saying 2026 is going to be a massive acceleration. Rate cuts, AI capital spending, softer regulatory rules.
See, that is exactly where I get off the hype train. Goldman predicting an M&A boom is like a barber predicting you need a haircut. Of course they see an acceleration. They need the advisory fees.
Cynical, but fair. Still, look at where the cash is actually flowing right now. Capitaland Ascenda's REIT just dropped 1.4 billion Singapore dollars on a massive buying spree.
Across Singapore and Japan, and the crown jewel there is not just standard commercial real estate, it is a massive hyperscale data center. Everyone is trying to buy the picks and shovels for the AI gold rush.
Speaking of buying things, Jacobs just finalized their buyout of PA Consulting. $1.6 billion to grab the remaining equity they did not already own.
That is just good corporate housekeeping. Clean up the cap table, take full control of the advisory side.
Boring but effective. I prefer the healthcare carve-outs. Olympus Partners is dumping the retina business of EyeSouth to Cencora for $1.1 billion.
Wait, dumping?
Offloading, selling, cashing out.
That is a highly strategic bolt-on for a pharma giant like Cencora, Nate. And speaking of pharma, Gilead is picking up Ouro Medicines. They are chasing a first-in-class T-cell engager for autoimmune diseases.
I love it when you talk science to me.
I read the footnotes, so you do not have to. But tell me about this fintech gossip you have been hoarding all morning.
Oh, this is peak fintech theater. Domestic credit card giant Isricard is reportedly buying Eshbank for $130 million.
I have literally never heard of Eshbank.
Nobody has. It is a digital challenger bank that is not even launched yet. Isricard is paying 9 figures for a bank with 0 actual customers.
Okay, I actually respect the audacity of selling a pre-revenue bank for $130 million in this market.
Pure magic. Which brings us to the actual heavy hitters. Private equity is aggressively hunting public companies right now, and Apollo just bagged an absolute mammoth in Japan.
$3.7 billion for Nippon Sheet Glass.
We need to unpack the actual structure on this one because Apollo is making a massive, highly specific bet on the auto and renewable energy sectors. The big one. $550 billion in 1 month. That's not a typo. February global M&A volume basically doubled January. We're hitting the second highest monthly volume in 4 years.
And everyone's trying to figure out if it's just a blip or the start of the golden era Goldman Sachs keeps promising us. Goldman is out there projecting a massive acceleration for 2026, citing rate cuts and a better regulatory environment.
I'm telling you, the dam is breaking right now. Look at the sheer size of the checks clearing this week.
True, but look at where that money's actually flowing. It's not all flashy AI startups and tech hype. The biggest swing this voices.
So Goldman comes out this morning and says we are looking at a massive acceleration in M&A for 2026.
Right. Driven by monetary easing, AI capital investments, and a quote-unquote more balanced regulatory environment, which is just banker speak for they think Washington will finally let them close a deal.
Exactly, and the market analysts are backing it up. Global deal value hit $550 billion in February. That is almost double January, second highest month in 4 years. The floodgates are open, Maya.
Oh, come on. You are really buying the floodgates narrative. Look at what actually drove that $550 billion.
I am looking at it. It is beautiful.
It is exceptionally top-heavy. You have Apollo dropping $3.7 billion on Nippon Sheet Glass. You have Jacobs paying $1.6 billion to swallow the rest of PA Consulting. This is not a broad market rebound. This is just private equity and legacy giants deploying dry powder because they have to.
But that is exactly how a rebound starts. The big players move first. PE is hunting public software targets right now like it is a competitive sport. Capital Ant just threw down $1.4 billion in Singapore and Japan, mostly for a hyperscale data center. The AI capital wave is entirely real.
I will give you the data centers. That is real infrastructure spend. But then you have these defensive plays that just make me laugh. Did you see the Isricard gossip?
The Bank deal.
Yes. A domestic credit card giant paying $130 million for a digital challenger bank. A bank that is not even launched yet.
Hey, if you want to eliminate the threat, you buy it before it gets its first customer. It is a classic move. Buy the hype, kill the rival.
It is absurd. $130 million for literally zero revenue.
Valuation is an art, Maya, not a science.
Please do not say that out loud. You are making my eye twitch.
Look, between the tech buyouts and the defensive banking plays, the momentum is definitely shifting, which actually lines up perfectly with what we are tracking for tomorrow.
Right. The Boston Spa and NBC Bancorp merger closing. We are going to see if that sets a new baseline for regional bank consolidation. Spill the tea.
Okay, but you have to admit there is something deeply funny about a massive legacy credit card company buying a digital challenger bank that hasn't even launched yet.
$130 million for vaporware. That is what Isricard is paying for Bank. I read the filings twice looking for a typo. They don't have customers yet.
It's not vaporware, Maya. It's a fully built tech stack with a banking license. Do you know how hard it is to get one of those? Isricard is basically paying a premium to skip the regulatory line. It's a classic buy versus build.
Or it's defensive panic. The incumbents are terrified. But sure, let's pretend it's a strategic masterclass. Speaking of panic buying, did you see that February global deal volume number?
$550 billion. Nearly doubled from January. Second highest month in 4 years. The bankers are officially back from the Hamptons.
Wait, you're actually buying the Goldman Sachs narrative. They put out that note saying 2026 is going to be this massive acceleration driven by AI and soft regulation. It feels like they're just manifesting fees.
I absolutely buy it. Look at the private equity sponsors right now. They're hunting public software companies like it's open season. If you have AI anywhere in your pitch deck, you have 3 term sheets on your desk by Friday.
Have you looked at the multiples though? They're paying software premiums for companies that are basically glorified consulting firms, wrapping open AI APIs. That is going to end in tears.
We're definitely going to argue about those multiples later, but for now, keep an eye on the community bank space. Boston Spa Bancorp and NBC Bancorp are finally closing their merger tomorrow.
I'm honestly more interested in the European cybersecurity roll-up. Econops just grabbed Chimera, and I think that sets a totally new floor for tech buyouts across the Atlantic.
We'll see if the regulators across the pond agree. But speaking of massive cross-border swings, we need to talk about Apollo dropping $3.7 billion on Japanese glass. Tomorrow's radar.
Goldman is calling for a massive M&A acceleration in 2026, but look at the data right now. February just hit $550 billion globally.
Second highest month in 4 years. The bankers are finally off the golf course.
Exactly. So why is Goldman telling everyone to wait for 2026? The boom is already here.
No, I disagree. February was just the warm-up act. 2026 is when the regulatory environment actually loosens up and AI capital demands exits.
Maybe, but tell that to Isricard. They're reportedly buying Bank for $130 million.
Wait, Bank? Haven't they literally not even launched yet?
Yep. 0 customers, $130 million.
A pre-launch fintech getting a 9-figure exit. Nature is healing. We're fully back in 2021.
It's completely absurd. Also on the radar for tomorrow, Boston Spa Bancorp and NBC Bancorp are closing their merger.
And I'm watching the French tech scene. Econops buying Chimera will trigger a massive wave of European cybersecurity roll-ups.
Assuming regulators don't wake up first, we'll pull the filings and see you tomorrow.